Hello, this is Ren Ballo from Geo Investing. Today is Saturday, January 29th, and I'm here to talk about our new market timing indicator, oboss. oboss is a oscillator very similar to RSI, quite different in the way it's calculated, but it tries to show extreme levels in the market, or extreme price action. Anything above 2 is considered extreme, and anything below a -2 is considered extreme. That could be, if we're above a 2, that means that the market is extremely overbought. And if we're below a -2, that means the market's extremely oversold. Anything between like -1.5 and a positive 1.5 is considered a healthy market and a strong uptrend for that. Here we have data between November 29, 2010 and January 28, 2011. Back in November, the market was consolidating, and we can see that oboss was indicating a very healthy level of buying and selling in the marketplace. So when we see these levels in the healthy range, it's a good time for you to rebalance your portfolios, add to strong positions, look for buying opportunities and things like that. When we work our way up into the more extreme levels on oboss, as we had about a week and a half ago, that's a good time to be protecting your profits, taking some profits at that time. Not necessarily selling your positions, but keeping your eye open for potential selling in the marketplace. Just recently, we had a reset in oboss as we got back down into the healthier levels. And then on Friday, we had a pretty big sell-off in the market, which reset our indicator, the oscillators, back down below 1. So at this particular time, considering the S&P 500 is in an uptrend, we'd be looking at stocks that we wanted to add to, new purchases potentially, and hopefully in the next couple of days, our oscillator will actually reset back down to 0 or even a little bit below 0, providing us with even better buying opportunities. It's very important when using oboss to know what kind of market you're in, and we are currently in a strong uptrend on the S&P 500. Here's the S&P 500 on the daily, and you can see we've been in a strong uptrend for a long time. So since September of 2010, actually going all the way back into August, the market has worked its way up quite strongly until we hit November timeframes. And we could see back in November we had a slight consolidation here. That also correlates to our oboss levels of reading of 0. So had you been watching oboss back in November, you would have been looking for stocks to buy and adding to positions that are strong in your portfolio already. If you weren't, it's never too late to start looking at this. But anyway, so right now we're in another strong uptrend, another leg up in the market, so to speak, and we've had some consolidation the last couple of days, and it's also resetting oboss, which is potentially a great place to look for new companies to buy, adding to very strong positions that you have in your portfolio, and maybe reducing some of the weaker ones. I look at your portfolio as a team, and if you've got 12 players on your team, occasionally you have to put some on the bench, and if they don't perform after they've been put on the bench, kind of like a warning, then you want to eliminate that position and pick a new one that's better. There's a time risk, and if you're holding something that isn't performing for you, just move on and grab a new stock. So this isn't so much about stock picking, it's more about market timing. So we're looking right now at adding to positions as the S&P 500 starts to consolidate. So we'd be looking for a little bit of consolidation and staying above some of these support levels, which also would be very healthy. To narrow it down, I'd like to look at the 30-minute time frame and just get an idea of what's happening in the market. Here we can see we have higher highs and higher lows up until just recently, this last week. So we're also seeing some support levels that are holding. So that's a very positive thing for the market, and we may even drift down a little bit further. But we are still in a healthy uptrend, as you can see by the 10, 20, 50, and 200-day moving averages all moving up, and price is holding above these levels as well. I would start to get a lot more nervous if price worked its way down to the 50-day moving average and the 50-day moving average starting to flatten out. I would consider that to be a cautionary time, and we would then review oboss and see where we were. I would guess we would be somewhere close to a -2 at that point. So that would present a very good buying opportunity, providing we maintain the up market. So I hope this gives you a little bit of a preview of what oboss is. You can view this every day of the week at the end of the day. We have it on geoinvesting.com, and if you click on our blog tab, you'll see market timing with oboss. There's a market timing. Click here and you go Renzo Boss. So you can follow me here. Hope to see you in the next couple of weeks, and have a great weekend. Thank you.